With gold and silver continuing their race higher, it was only time before Peter Schiff was invited on the TV networks, and he did not disappoint. Peter Schiff is often called a gold bug for good reason. He is obviously enjoying the last year or so as the commodities has raced higher. But he is now going on news networks and saying things like, the dollar will collapse. Gold will replace the dollar. We are going to go through an economic collapse bigger than 2008. I think this is interesting. It's right on brand for Peter Schiff. I think it is nearly irresponsible to put the idea out there that gold would replace the dollar. I think we've kind of jumped the shark on that. I don't think there's enough gold out there to really make that possible. Could the dollar be collapsing? If you zoom in, but what I would ask you to do is zoom out. If you zoom out on the dollar over the last decade or so, we're right in the middle of the range. Sure, the dollar fell 3.5% in 5 trading days. Sure, it's on a downtrend the last couple of months. But if you zoom out just a little bit, Peter, you will realize that the dollar is right in the middle of a long-term range. We're not even in the bottom quartile. And you are talking nonsense about gold replacing the dollar. Peter, enjoy this time. You've been talking about gold for decades. Enjoy the time, go on the networks, but please don't spread crazy ideas that gold is suddenly going to replace the dollar. That is not going to happen. Yesterday was Fed Day. Obviously, as expected, no rate cut, no rate rise, kind of a boring session. I did take a couple of notes from Powell. It was kind of a boring meeting, boring press conference, like I thought. Here are the things that I noted from Jerome Powell yesterday. Economy has surprised us with its strength. So the economy is doing better than they expected. Consumer spending is resilient. More on that a little bit later. Labor market might be stabilizing. Need to keep an eye on inflation, to which I would say, guys, you're looking in the rearview mirror. Go look at Trueflation. Inflation is under 1.5%. Congratulations. You beat inflation. Take your victory lap. Stop talking about inflation. Your guy's shelter metric is so broken, so bogus. Estimate that goods inflation would be tariff impact, will peak in the middle of the year, which, oh, by the way, we're almost done with January. Can you guys believe January is almost over? It's almost over. Wild. Continuing with Jerome Powell, there has been a disconnect for some time between downbeat consumer sentiment or surveys, downbeat consumer surveys and actual spending. Who's been telling you that for the last 3 or 4 months, that they do not trust these bogus surveys because it doesn't match human condition or human behavior? The consumer is still spending. We have earnings out, which we'll talk about in a minute, that just goes to show consumer is spending. So whoever is responding to these surveys, they are just out of touch, I guess. I don't know. I don't know who is picking up these phone calls, who is answering these questions, but clearly they do not represent what the average consumer is doing. Hard to say policy is significantly restrictive. I think Jerome Powell there is pointing at the stock market, home prices, things of that nature. Getting through the data distortions from government shutdown, which I think is interesting because we may have a shutdown in 36 hours, whatever it is. Again, there's still a fight in Congress about funding for DHS. Will the Republicans go ahead and divide up the funding bills, pass the ones they can, and then leave DHS to be negotiated later? That's kind of an escape hatch. Frankly, it's something we should hope they do. Otherwise, we're right back into government shutdown, and we don't need that nonsense. I don't know if you saw gold this morning, but get this. On Monday, gold hit 5,000. Today, gold hit 5,500. Gold is up 10%. Again, shout out Peter Schiff for his decade-long call that gold is a great investment. Other things I noted from the Fed, again, these are not Powell specific, but just kind of the Fed meeting. Obviously, there was no cut. There was 2 dissents. I don't know if you guys picked up on that. There were 2 dissents, both Trump loyalists, people playing for the big job. So Fed President Moran, who's dissented at each of the meetings he's been at, although important note, he only wanted a quarter point cut. Fed President Moran wanted 50 the last several meetings. The other dissent was from Fed President Waller. Again, Waller is trying to get the big job, so he's trying to show Trump that he's willing to cut. Number 3, Powell said repeatedly, I have nothing for you on that. As expected, the media tried to dig in and talk about Lisa Cook and the subpoena and all of those things. And frankly, Powell was not playing. He just said, next question, basically. Number 4, solid growth, near-term tariff-fueled inflation. The Fed is still concerned about inflation, even though it appears in reality that they have beaten it. Number 5, the market is still saying that we will get 2 cuts in 2026 and no cuts, 0 cuts in 2027. So let's talk about some earnings. Back to the consumer spending. We had Royal Caribbean. They actually missed on revenue, but matched earnings. Revenue was up 13% year on year. They had record bookings heading into season 2026. Caterpillar beat top line and bottom line with revenue up 18%. I'm wondering if Caterpillar is going to do well this year, given the bonus depreciation and all of that. Blackstone, we were worried about Blackstone given BlackRock's write down of a fund, but Blackstone beat top line, bottom line. They're highlighting that transactions, mergers, acquisitions, things of that nature are starting to thaw. Again, it was frozen under the Biden administration. So again, Blackstone highlighting that transactions are thawing. Weekly claims came in at 209, slightly worse than expected. But again, nothing to worry about. We don't get concerned until we're at 300, or really 3.25 would be concerning. Let's congratulate some people for joining school. Folks, I don't know why you haven't joined school. You know you want to live stream our Vegas event, which is 2 weeks away. The only place we're live streaming the event is in school. So go get your month subscription. Figure out if you like the community or not. But it is the only way you'll be able to live stream the event is inside school. Joel, Chesla, Drew, David, and Jerry, thank you all for joining. Make sure you introduce yourself to the amazing community. Let them give you a big virtual hug and keep moving forward. Looking at household balance sheets, the debt to asset ratio is at a 50-year low. What does that mean? That means we got a whole bunch of assets and not a lot of debt. That is likely why consumer and the K-shaped economy is still spending. We did get a bunch of tech earnings yesterday. We got Microsoft beat on the top line, missed on the bottom. Says that Azure revenue is barely met expectations. So their growth engine is slowing down. Microsoft take it on the chin this morning. Meta beat top line and bottom line. Said that they had 3.5, let's round it to 3.6 billion daily active users across their platform. What is that, like 40% of the world? That is crazy. They did highlight that CapEx spending will be up more than expected. So again, the hyperscalers are still spending. Tesla had their first yearly revenue down year on year. They're talking about building a fab. I don't know if you guys saw this, but Tesla is talking about building a fab, a chip fab, for about $20 billion because they their suppliers can't keep up with their needs. ServiceNow beat top line and bottom line, but the SaaS companies continue to struggle. And finally, IBM, good old stodgy IBM, beat top line, bottom line with revenue up 12%. So again, very interesting. I do want to talk about our school community. A brand new accountability group will start next Thursday. The new group will be called Wealth Beyond Real Estate. Yes, folks, our community is so amazing, and we are open to any and all everyday wealth builder topics. There is a community or a group kicking off 9 a.m. Pacific talking about wealth from anything but real estate. So I think that's fun that the group is branching out and having those discussions. So again, folks, remember, Steadily is the sponsor of the Daily Financial News. They have once again helped Olivia. They just saved us $700 on one house and $1,100 on a duplex. So we'll add that $1,800. We got to be at $8,000. Steadily has saved Olivia and I $8,000 since we've been quoting with them. So again, shout out that team. It is your job as a landlord to make sure you get the best rate with the best coverage. Insurance is going up. If you're like us, and Farmers basically said no thank you, kicked us to Foremost, I strongly suggest you re-quote that, because we are finding that Foremost quotes, which are about double Farmers, are easy to beat for Steadily, at least in our examples. Again, 2 more Foremost insurance quotes. No, thank you. We do not want to see our insurance rates double, so we will go somewhere else. All right, folks, take care of yourself. Lastly, don't forget to get your tickets to our event if you want to come. We still have 16 tickets. We haven't sold any tickets in a couple of days. So if you want to come out to Vegas, be in person, be at the family reunion, get your tickets now, and we will see you there. Take care, everyone. We'll be back Sunday morning, 7:30 a.m. Hope to see you there. Later.